Want to start stock trading but don't know where to begin? Let's start at the very beginning. Stock trading is essentially buying and selling shares in publicly traded companies. These shares, also known as stocks, represent a portion of ownership in a company. You might have heard terms like market orders, limit orders, and stop orders. These are just instructions you give your broker on how to execute your trades. A market order, for example, is an order to buy or sell a stock at the best available price. Now here's the deal. Diving headfirst into the stock market without understanding these basics can be risky. It's like trying to drive a car without knowing the rules of the road. The takeaway here? Knowledge is power in the world of stock trading. So, equip yourself with the basics first. Remember, a well-informed trader is a successful trader. What's your financial destination? You see, in the world of trading, setting clear financial goals is like plotting your route on a map. It's about knowing where you want to go and charting the best course to get there. Think about it. Are you aiming for short-term gains to fund, say, an upcoming vacation? Or is your gaze set on long-term growth, building a nest egg for retirement perhaps? Your goals can and should influence your trading decisions. Now let's not forget about risk tolerance and time commitment. Not everyone is comfortable riding the roller coaster of high-risk trades, and that's okay. Your goals should align with your comfort level when it comes to risk. And time commitment? Well, day trading is a full-time job, while swing or position trading allows for more flexibility. Your goals should reflect the time you can dedicate to trading. Remember, your goals are your guiding lights in your trading journey, so define them clearly. Not all stocks are created equal. This is a simple yet profound truth in the world of stock trading. Each stock is as unique as the company it represents, with its own set of strengths, weaknesses, and potential for growth. To choose the right stocks, you need to roll up your sleeves and dive into research and analysis. Look at the company's financial health, its competitive position in the market, and its potential for future growth. Now, you'll come across different types of stocks. Blue chip stocks, for instance, are those of large, well-established, and financially sound companies with a history of reliable performance. Growth stocks belong to companies expected to grow at an above-average rate compared to other companies in the market. Value stocks, on the other hand, are shares of companies that are considered underpriced compared to their intrinsic value. Remember, the stock market is a dynamic ecosystem. Market trends play a significant role in stock selection. Choosing the right stocks is a skill that can be honed with time and experience. Trading is not just about profits, it's also about preserving your capital. And that's where risk management comes into play. It's about making sure you're not putting all your eggs in one basket, and that you're protecting yourself from any potential downturns in the market. One effective risk management strategy is the 2% rule for position sizing. This rule suggests that you should never risk more than 2% of your trading account on any single trade. It's a simple yet effective way to limit your losses and keep your account healthy. Another essential tool in your risk management toolbox is the stop-loss order. By setting a stop-loss order, you're telling your broker to sell a stock when it reaches a certain price. This can prevent a small loss from becoming a big one. Remember, managing your risk is just as important as making profits. Don't put all your eggs in one basket. This timeless nugget of wisdom is the essence of diversification, a key strategy in mitigating risk in stock trading. But what exactly is diversification? Simply put, it's spreading your investments across a variety of assets to lessen the impact if one of them doesn't perform well. So how do you build a diversified stock portfolio? Think about it like creating a balanced meal. You wouldn't want a plate full of just potatoes, right? In the same vein, your portfolio should consist of a mix of different types of stocks, blue chip, growth, value, and more. It's also crucial to sprinkle in investments from various sectors and geographic locations. And what's the impact of diversification? Well, just like a balanced meal keeps you healthy, a well-diversified portfolio can provide stability amidst the market's ups and downs. Remember, diversification is your safety net in the volatile world of stock trading. There's more than one way to analyze a stock. Now let's dive into two popular methods used by traders: fundamental and technical analysis. Fundamental analysis is akin to a detective's investigation. It's about scrutinizing a company's financial health, examining its income statements, balance sheets, and cash flow. It's about understanding the company's business model, its competitive position in the market, and the competence of its management team. The goal? To determine a company's intrinsic value and see if its stock price is over or undervalued. On the other hand, technical analysis is more like reading tea leaves. It involves studying price patterns and trading volumes in the stock market. The belief is that historical trading activity can predict future price movements. So which one should you choose? Fundamental or technical analysis? Well, the best strategy often involves a mix of both. By combining these approaches, you get a more comprehensive view of a stock's potential. Fundamental or technical analysis? The answer is both. Even the best traders make mistakes, but the difference is, they learn from them. Now let's discuss some common pitfalls that beginners often fall into. One of the most common mistakes is letting emotions drive decisions. Fear and greed can cloud judgment, leading to rash decisions. Remember, trading is not a get-rich-quick scheme. It requires patience, research, and calculated risks. Another common mistake is neglecting to set a stop-loss order. This simple step can prevent you from losing more than you're willing to risk. And let's not forget the importance of diversification. Putting all your eggs in one basket is a risky move. Lastly, don't get stuck in a losing position, hoping it will turn around. It's better to cut your losses and learn from the experience. And when you do make a mistake, don't beat yourself up. Instead, analyze what went wrong and adapt your strategy. Mistakes are stepping stones to success if you learn from them. Your broker and trading platform can make or break your trading experience. That's why it's crucial to understand their roles and know what to look for when making your choice. In the world of stock trading, a broker is your gateway to the market. They execute trades on your behalf, but they're not just transaction facilitators. Many brokers offer a wealth of resources such as educational materials, research tools, and market analysis, which are particularly valuable for beginners. Now, when it comes to selecting a broker, consider these key factors. First, cost. Most brokers charge a commission per trade. However, some offer commission-free trading, but be wary of hidden fees. Always read the fine print. Second, customer service. Look for a broker that offers support when you need it. This could be via phone, live chat, or email. Remember, in trading, time is money. Third, resources. As mentioned earlier, educational materials and research tools can be a boon for beginners. So, take a look at what each broker offers. Once you've selected a broker, it's time to choose a trading platform. This is the software you'll use to execute trades. Some brokers offer their proprietary platforms, while others allow you to use third-party platforms. When choosing a platform, prioritize user-friendliness, especially if you're a beginner. Look for a clean, intuitive interface that makes navigating the world of trading as smooth as possible. Other features to consider include charting tools for technical analysis, real-time market data, and the ability to place different types of orders. Some platforms even offer demo accounts where you can practice trading with virtual money. Remember, the right broker and trading platform can greatly enhance your trading experience, giving you the tools and support you need to navigate the stock market confidently. Choose a broker and platform that fits your needs and enhances your trading experience. And with that, you're one step closer to becoming a successful trader. Consistency is key in trading. Just as a world-class athlete sticks to a rigorous training schedule, a successful trader follows a disciplined routine. This routine starts with setting specific trading hours based on market conditions and personal commitments. Next, it includes a daily ritual of reviewing market news and analyzing potential trades using your chosen strategies. Then, executing trades with precision and without letting emotions cloud your judgment. But remember, the market is always evolving, and so should your routine. Make it a habit to regularly review and refine your trading strategies based on your performance and market changes. This process of continuous learning and adaptation is what keeps a trader relevant in the ever-dynamic world of trading. And lastly, don't forget to include time for rest and rejuvenation in your routine. Because, well, even the most dedicated trader needs a breather. Develop a routine, stick to it, and keep learning. Let's wrap things up. We've embarked on a journey through the world of stock trading, starting with understanding the basics and setting clear financial goals. We've explored how to choose the right stocks, and the critical role of risk management. We've delved into the importance of diversification and the power of combining fundamental and technical analysis. We've examined the common pitfalls to avoid and the significance of selecting the right broker and trading platform. And we've underscored the value of developing a consistent trading routine. Now, it's time to put all these strategies into action. Start small, stay patient, and remember that learning is a continuous process. Don't hesitate to revisit these points as you progress and adapt your strategies. Keep your eyes on the prize and remember, every successful trader started somewhere. Remember, the journey of 1,000 miles begins with a single step. Start your trading journey today.